All right, thanks for tuning into Talking Point. I'm your host, Neeraj Shah, and our guest today in our studio on a very special day, a very special guest, Devina Mehra, founder and chairperson and MD First Global. Devina, so good having you. And on a day when the markets have scaled historic highs, you are a good omen, good mascot, whatever you call it. Thanks for being here.
Thank you, Neeraj. A pleasure to be here. And I don't see the balloons and confetti, or did you have it yesterday? I don't know.
Yeah, maybe we made some attempts. Now all of it is digital. So we kind of don't have to clean up the floor as well. It just pops up and it's gone. but honestly, Devina, is it time to do all of that, or do you think now we are kind of pricing in more than just the balloons and the confetti, maybe even the caviar?
Okay, actually, I mean, I look at markets in two cuts, and you can say 2 by 2. So one part is that the large cap versus the small cap, which we've spoken about in the past also. So I am quite comfortable on the larger side, and that too, I mean, but on the small cap side, there has been a lot of froth built in. So we have been very careful, especially any company below 5,000 crore market cap. We have now very little weightage, which in the short term, of course, hurts performance because that segment has done well. But we always manage for risk first, because investing is a loser's game. You win if you don't lose. So the first rule is not to lose. The other part is the time dimension. So you have to look at markets as 1-2 year view and the shorter term view. So 1-2 year view, I remain positive, and the reason is very simple. You had a whole decade, 2010 to 20, where you had very much below average returns. So we have this impression in our minds that equity markets give you 15-16%. That whole decade, it was 8.5, 8.8 in that kind of range, which means practically you got no returns over fixed deposit returns.
Yeah.
So, I mean, 100 rupees only became 230 rupees in 10 years. In 1980, that 100 rupees became 700 rupees in 10 years. So that's what created the room, and that's why the market is still not very much above. I mean, it's not even at the trend line, let alone being above the trend line. So the risk of a crash is limited. But on a 1-2 month basis, can there be volatility? Yes. So the way we are playing it is that we are hedged. So our PMS portfolios are hedged, but we are not in cash, because you don't want to miss out if the market goes up. On the other hand, you want to limit losses if for whatever reason there is a interim crash. So that's the way we are playing it.
That interim cash is event based, or do you reckon trend based?
It is, I mean, it is showing up on the system. So it can be event based and it can be otherwise also, but it was, I mean, we've been hedged. We were hedged in March also, and once those expired, we again put on the hedges, and we put it on before the volatility index went up. In fact, we were wondering why the VIX was so low, why the volatility index was so low, but we said, whatever it is, let's take advantage and lock in the hedges.
Yeah, making a smart money does that. Yeah, I know. Devina, what did you make of this RBI dividend? I mean, yesterday, to my mind, the market action was purely because of that. What do you make of that? One, the buffer that it gives to the government for multiple things, and two, what does it do to yields and thereby to all the resultant investing implications that come out of a potential yield fall, if you believe in that?
Actually, I mean, one has to look into it. All the details are not yet available as to where this surplus came from. That part. In fact, yesterday we were discussing this, like still maybe the next monthly report is RBI is when it will be clear where they took the money out of. Exactly, was it currency related, was it something else? So yeah, for now it eases up the government a bit, because I mean, the fact is that the debt has been going up a lot on the government side. So that has been a concern area at the back of the mind if you look at the fiscal side, because in spite of having a fairly good run in terms of the global macro situation, barring the COVID in the middle, but you had oil which was at very low prices, etc., etc. Even then, the debt has been creeping up. So that's been a concern area. So let's see how that changes things.
Yeah, but so that study notwithstanding, now that we know that there is money in the hands of the government,
right,
what does that do, for example, to the comfort around the fiscal glide path? What does it do to the comfort around spend that the government may have to do, because the number is very large?
Yeah, I mean, GDP has been running on a single engine, which is government spending. There's been nothing else that has really worked in the GDP in the recent past. So yeah, so and that has been the reason why the debt has been going up. So yeah, this does give some cushion to the government for sure.
Okay. You think yields will correct or not necessarily?
Let's see on that. I mean, that's like, in any case, I don't think yields will harden from here. That probably is not going to happen. So let's see what happens on the other side.
Okay. Now, I was wondering if somebody who looks at things both tactically, quarter on quarter rebalancing, etc., do for example PSU banks come into the fray because yields coming off would straight away help the MTM portfolios per se, right? The bond portfolios. I'm just trying to think if that comes into the picture.
Yeah, actually, you can argue it both ways, because when yields harden, your interest NIM goes up because your loans get repriced first and the deposits get repriced very slowly. So, but of course, the PSU banks have a large bond portfolio as well. I mean, we've been among the banks been positive on the PSU banks. So we have been more weighted towards the PSU banks. We are still not overweight banks. And we've added a couple of private sector names, but we still remain more skewed towards the public sector for sure.
So the last quarterly rebalancing, yes, PSU banks saw any downward draft, or is it status quo?
No, we have, and we've added a little bit in banking, which has been in a couple of private sector banks, because we were hugely underweight banking. So, I mean, there has been a period when it has underperformed. So I think, that huge underperformance period is probably behind, and now you might be in a more stable situation.
Got it. I have some sense of some of the things that you've done because you spoke the last time. A couple of things have happened since then, and I just wanted your view here.
Right.
I know you balk at egregious valuations per se, but that didn't stop some of these MNC cap good names. And I'm not just talking about the ABB and the Siemens, but even the ball bearing companies like SKF, Timken, they've gone berserk in terms of how the market is rewarding them and the valuations. How do you think about this?
See, markets go from one extreme to the other. So as I spoke about, I think last time also, capital goods is one area where we have been overweight since October 2021. People started talking about only in the past 1 year. So the question we actually ask every quarter is the story over? So, I mean, our systems have not yet said that the story is over, but we have cut. Every quarter we have cut because stocks have tripled and quadrupled. And so we have cut weightage, we have shifted from one stock to the other, but we are still on a net basis, still overweight compared to the benchmark for sure. But we are watching that space that sometime it will top out, just as we are watching IT services that sometime it will bottom out. And maybe both these things will happen this year.
Well, let's wait and watch. Okay, two pockets, again, which have had contrasting moves. And I know we've spoken about both of these, but because so much happens between the last time that we speak and this time, I'm compelled to ask this to you again.
Sure.
One of them is real estate. And the reason I bring this up is the updates that I saw, for example, from two NCR companies, we spoke to, I'm just using these names and examples, of course.
Right.
I spoke to Signature Global, which had a fabulous up move, a fabulous performance in terms of delivery in FY24. They've guided to another very healthy performance in FY25. Yesterday, we saw a small stock called Max Estates come out and give nearly a 2.5x uptick in FY25 or FY24 in terms of what they will do in terms of delivery. Who is buying all of this in specific markets, NCR, South, MMR, and is that good enough for the stocks to continue the merry run?
Well, I haven't looked into these stocks or who's buying, but I mean,
No, I was thinking who's buying the apartments so much.
Yeah, I know the apartments only I am talking about. But if you look at the macro picture, that whole theme, whatever you call it, K-shaped recovery, premiumization, that's very much there in the numbers. Because I was reading this, I don't know whether I spoke about this last time, I was reading Rama Bijapurkar's book, Lilliput Land. So
on Twitter you did speak about it.
Yeah, so there, I mean, the surprising bit for me was that the full bottom 60% of India, the incomes have actually been going down since 2016. And most of all for the bottom 20%. So now that explains why now top 10% of India has 65% of the wealth. It used to be 40% not so long ago. So that's why the wealth is becoming concentrated, which is of course, increasing inequality is one thing, but what was surprising to me was that in absolute terms, the bottom 60% is actually the income is going down. They have no surplus, which means surplus means income minus routine expenditure, not even one-time expenditure also. So that's why everything that is selling is only the high end. And obviously the listed real estate companies operate in that end. So So that's why, I mean, I sometimes laugh when I see fund managers also talking on TV that all my friends are buying luxury cars and they are buying apartments, so the economy is doing well. I said that, your friends don't constitute the economy.
But at the same breath, so I'm going to be talking to Pranjal Bhandari of HSBC today again. But the last time that I spoke to her, their assessment was that, or their study had found out that the rural balance sheet in the last 6 months, primarily led by non-agri income, has actually gained strength. Now, over a period of time, the bottom 20, as you said, as per the book, I haven't read that book, we've gone down, but the last 6 to 9 odd months, things have actually improved at the margin.
Well, the GDP, if you look at the consumption growth number, is still quite poor. I mean, the last print was, I think, sub 3%, 2.9 or something, which is extremely low. I mean, it has not been this low for like 21 years or something.
Okay.
Yes, once things, like somebody was telling me about one of the FMCG companies lately, that the rural volumes fell 5% and then this year they have gone up 6%. I said, you realize net, that means in 2 years it is flat. So yes, I mean, from the bottom it might have gone up, but that doesn't mean much.
Okay, well, hopefully that trend continues.
Let's see I mean, happens. Let's hope the monsoon is also good, which will help the, and also the employment is really, the employment and consumption go together. So because the employment scenario has not been good, that's probably what is hurting consumption as well.
Got it. The other aspect is commodity, and I would love to know what you think of it, because the data around China keeps on ebbs and flows out there. The recent CBI seems to be that they are now serious about the property market revival. My question to you is, if there is a US industrial spend happening, if China is reviving property market, does it augur well for metal prices and thereby the metal stocks as well?
So, I mean, you asked about the last rebalance, actually a little before the last rebalance also. One area where we have added has been metals.
Okay. So
that's where we are now overweight from being quite a bit underweight. So both industrial metals, you can say, and our multi-asset portfolios, even silver is, which is something I spoke about even a month and a half ago, that's where we have added. And since then also silver has gone up further. So silver was looking better vis-a-vis gold. And silver is precious metal, but also a little bit of industrial. So that's, you spoke about that US industrial number. So yes, I mean, silver, that's also a tailwind for them. And China as a market also, we think, has now bottomed out. So we are now positive China.
So therefore, you would reckon that both the hard commodity itself and the underlying stocks, ferrous, non-ferrous, what have you, all of them could actually have a decent next 6 to 12 months maybe?
In commodities, it's always difficult to say how long it would last. But for now, as I said, they're looking good. We are currently overweight, but commodity bull cycle, bull run is something which hurts a lot of end users. So it is not something that everyone wants to have, unlike a stock bull run, I would suppose.
Actually, that was going to be my next question, by the way, that if indeed metals have done well, would end user industries like autos, for example, which have done very well thus far, see a bit of a pressure going ahead, you think?
Yeah, obviously, I mean, there would be a cost pressure if that happens. But, I mean, we remain positive on autos still. I mean, auto components, we are still somewhat overweight.
But I'm just trying to think, why? Is it a volume game now? Because they've enjoyed great margin because of the commodity deflation.
Right.
If that reverses, wouldn't that be a big headwind?
Yeah, it would be, but I mean, depends on metals, what percentage it is of this thing, which again is different for two-wheelers and cars and so on. And also now, the premiumization helps them also, because you see the high-end cars and SUVs selling much more than the entry level, so which again is higher margins.
That's true. Devina, we can't wrap without talking to you about what has been the biggest buzzword. And this morning I was talking about a Korean semiconductor company which has gained 1200% since 2022. Maybe that has. But the world is obsessed with what Nvidia is doing. Like, how do you think about a juggernaut like Nvidia, which keeps on saying yes every single time to every question hurled at it?
Nvidia is, like last year, if you know, the NASDAQ move was very concentrated. So Nvidia was the only one out of those top 7 that we were overweight. So that's been a big winner for us as well. And while we have again, because it gained weight in our portfolios, we have cut it back a bit, but we are still holding reasonable amount of Nvidia.
Yeah, but what's happening with this? Is it? I mean, is this? It sounds too good to be true. The kind of gains that a stock like that or a business like that is making.
Yeah,
is it here to stay?
Yeah, I mean that's why. I mean we did cut back, thinking that
but are the profits here to stay? Is the optimism here to stay?
It's a little ahead of where it should be, but then the results this time also were pretty spectacular.
Yeah, they were. So I'm just trying to understand: is the business momentum here to stay for a business like that?
For now it is, but it is difficult, you know, as I said, that once the valuations and prices go up that much, that as I said, we've trimmed, but we are still there.
Okay, got it. Devina, great talking to you as always. Thank you so much for being with us in our studios this morning, and have a great time until June 4th and beyond. Really interesting to see if there's an event risk that brings that fall down, or is it something else?
Thank you, Neeraj. Pleasure being here.